Everybody is lying about Mullen Automotive and the stock has been dropping once again. Retail investors might have no say whatsoever in the upcoming shareholders meeting. In this video, I'm going to look at why that is, and I will look at a filing that was released after hours on Friday evening, which highlights some of the extent of the problems at Mullen Automotive. I will look at why retail investors don't matter to Mullen and discuss why December 21st is such an important date for MULN stock. If you are new to Mullen stock, then you need to know this. Before we get into the video, it takes a lot of time to do this research, so help the channel by smashing the like. It literally costs nothing, but it helps me out so much. I'm aiming to get 300 likes on this video, help me make that happen. As always, it's greatly appreciated. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on new updates. I'm not a financial advisor, this is not financial advice, so always do your own due diligence. Now let's get into it. So it's been a busy couple of weeks for Mullen Automotive stock. First, the company announced that the annual shareholders meeting will take place on December 15th. And a lot of people thought that this was closely linked with the progress they were making with the Nasdaq hearing board. Then on October 26th, Mullen issued a press release acknowledging that Mullen had received a favorable decision from Nasdaq hearing panel, allowing MULN stock to continue its listing on Nasdaq provided the two things take place. The company must demonstrate compliance with maintaining a closing bid price of $1 for 20 consecutive trading days on or before January 22nd. And secondly, the company must demonstrate compliance by holding an annual shareholder meeting on or before March 8th. So providing that Mullen goes ahead with the annual stockholder meeting on December 15th, the second of these two criteria will have already been passed, and the last remaining issue is to get the stock price above $1 for 20 consecutive days by January 22nd. Now this is very important. In order to gain compliance and have 20 consecutive trading days, the company needs to be above $1 by December 21st. So between Christmas Day, New Year's Day, and Martin Luther King Jr. Day, there is 20 trading days between December 21st and January 22nd. Now, the reason that this is so important is that the annual shareholder meeting, where the company will be discussing the reverse stock split, is taking place on the 15th. So provided that the reverse stock split is approved by shareholders, then Mullen will have 3 days to enact this reverse stock split. And as we already know, the stock split can be anything from a 1-for-2 right up to a 1-for-100 reverse split. Now, the general consensus among retail investors is that they cannot suffer another reverse stock split, because this will be the third split that Mullen has performed in 2023. But the reality is that the share price needs to be above $1, so have no doubt about it. Mullen stock is going to be delisted from Nasdaq unless the reverse split is voted in favor of. And of course, right now, as we've seen from the filing last week, the Mullen float is majority owned by retail investors. So it will be retail investors who make the decision of whether or not Mullen Automotive remains on Nasdaq. Retail owns the majority of the float, so retail owns the majority of the vote. Or do they? For a lot of retail investors who have been following Mullen throughout 2023, they may not be aware that Mullen was in this position before, but the reality is that by the time the vote took place, retail shareholders had no say whatsoever despite owning most of the shares. And I will talk a little bit more about this in a moment, but first I want to take a look at this. The latest SEC filing that was filed after hours on Friday evening, because a lot of people seem oblivious to what David Mitchery, Mullen Automotive, and the company insiders are actually doing. So this form 424B7 was filed with the SEC after hours on Friday evening. This is a prospective supplement number 8 to a prospectus that was originally filed in February. So this is in relation solely to the resale by investors listed in the section Selling Shareholders that I will look at in a moment for the sale of 103 million shares of common stock issued upon exercise of warrants. The warrants have an exercise price of $3.88, $4.68, and $1.44 per share. So as it says here, additional shares of common stock are being registered for resale pursuant to the terms of the warrants under security purchase agreements to cover additional shares of common stock that may be issuable under the anti-dilution provisions contained in the terms of the warrants and described here under selling stockholder and description of capital stock. And of course, a very important line here is this one. We will not receive any of the proceeds from the shares of common stock sold by the selling shareholders other than any proceeds from any cash exercise of the warrants. So if you've been following Mullen over the past year, then technically this is nothing new if you understand everything that is going on. Like, the prospectus was originally filed in February, but the most important thing to notice is the anti-dilution provisions that are contained in the terms of the warrants. Now, if you follow my channel and seen my MULN video 2 weeks ago, then you would have seen that Mullen have been diluting shareholders at a time when they have been talking about trying to get the stock price above $1. They have been talking about the share buyback scheme to increase the opportunity of getting to $1, but they were in fact still diluting shareholders. In their latest 10Q, for the 3 months ending June 30th, the company had total outstanding share count of 27 million shares. Then Mullen did a 1-for-9 reverse stock split, which would have brought the outstanding shares down to only 3 million shares. But when they released their 14A filing just 9 days ago, the company actually had 287 million shares outstanding. So where Mullen have been talking about share buybacks, they were in fact diluting at a massive scale. But this has not ended. Like, that filing was only 10 days ago, and in the filing after hours on Friday, it is clear that Mullen are still diluting. In the space of just 10 days, they have added another 25 million shares of common stock, which we can see here. As of October 25th, we have outstanding 311 million shares of common stock. Now, I've said it before and I've said it again. I have never seen a company that has diluted at the scale that Mullen Automotive dilutes. This is destruction of shareholder value. But let's face it, Mullen Automotive and its board of directors and CEO and its insiders couldn't give a shit about the share price or the level of dilution. Every time they dilute, it's by selling shareholders with zero proceeds going to Mullen. These selling shareholders have made an absolute fortune on Mullen Automotive over the past 2 years. These guys, Esauza Holdings and Aquitas Capital, who have made hundreds of millions of dollars while retail investors have seen their share price go down 99% in that time. Every opportunity that David Mitchery gets to sell shares, he sells them. As we can see here in Benzinga, he has literally been selling his Mullen stock every single time he is awarded stock, right from the very moment that the company went public. And we can see from the 14A filing that David Mitchery now only owns 1.3 million shares of Mullen, and the board of directors owns next to nothing. This is not a management team that is on the side of retail investors or any stockholders in general. But going back to the point that retail investors now own the majority of the stock, so retail investors can decide what to do. But I think that this is an illusion. We've been in this scenario before where retail investors owned a majority of the float but had absolutely no say when it came to the actual voting. If anyone remembers back to November of last year, practically a year ago, when David Mitchery was not in control of the vote, he simply issued himself one AA preferred share. This preferred share gave him 1.3 billion voting power. At the time, I think the outstanding share count was about 2.5 billion shares, so regardless of what anybody else voted for, David Mitchery had the last say as to what happened regarding the vote. So this could easily happen again. If David Mitchery wants to stay in control of Mullen Automotive, he simply has to issue himself another AA preferred share once again, pass whatever vote he needs to pass, and retail will have absolutely no say whatsoever. If you have not already done so, then like and subscribe. This channel is one of the only channels on YouTube that has consistently spread the truth about stocks over the past 2 years. For anyone who truly believes in Mullen Automotive and truly believes in the CEO, that he can turn it around, then you really need to watch these 2 videos that are appearing on the screen right now. Don't forget to hit the thumbs up, and I would love to hear your thoughts on what is going to happen at Mullen Automotive next week. Personally, I think the stock is going to drop as soon as the market opens on Monday. But remember that this is not financial advice and I am not a financial advisor. Enjoy the rest of your weekend and I'll catch you in the next update.